AI company that is backed by Nvidia and just got a new $6 billion deal with Nvidia today. It's at a favorable spot technically, and I can't think of a better AI linked stock to buy right now. So let's jump into the chart right now. This is the chart, and the favorable spot is right here around 110, and in particular, if we zoom in the past few days, 120. You can see that breakout level clear as day. Now, why now? They just had a $6.3 billion cloud computing agreement with Nvidia. It formalized last week, and it extends through 2032. So that's a long time. It does obligate Nvidia to purchase any unsold computing capacity from CoreWeave's data centers. That's a huge deal. Again, Nvidia already invested them to the tune of $100 million for about 6% stake. And now they also have financial stability by guaranteeing demand. So Nvidia is making sure this company is going to succeed. Nvidia is expensive right now. CoreWeave is not. In particular, we did see that this matters already. Stock did go up today. There was a noticeable uptick. Okay. This is September 9th. You can see the stock has gone up and is now at a favorable level technically. So what was happening on the 9th? Well, there was some other news, okay, $20 billion deal between Microsoft and NBIS is also in the data center business, okay? So huge multi-billion dollar deals. This is 2031. It's very similar to 2032. This is what you call a theme, okay? And if we look at NBIS, look at that move, all right? So it's okay that the initial moves already happened in these two companies. I personally like the chart more on CoreWeave. If we look at NBIS, we can see the comparison here. You're kind of buying, hoping for a second move, even after you just had one that was ridiculous. Okay, 40-50%. So if you consider CoreWeave's only gone up, 40%, and it actually took a week rather than a single day, there's a lot more meat on the bone and blue skies in the case of CoreWeave, okay? It doesn't hurt that it is backed by Nvidia, so that it's very unlikely this is just going to drop off the map. I do suggest that you watch your position. I'm just saying it never hurts to know that they do have a partnership and a literal investment, okay? There are strategic reasons to buy this company, and importantly, for the value investors who understand filings, there was a lockup period that expired about a month ago, okay? 80% of the shares were released. There was a sell-off, including a large sale by a director. But this was the time, well, actually, it was exactly here, okay? So it coincided with earnings. But we're getting back to that level, and the benefit now is we already know that those stocks are in the float. Okay, if you don't know what a float is, it's the publicly traded shares available for us to trade. So we don't have to worry about directors selling shares. We don't have to worry about lockup periods. We don't have to worry about insiders. We have a real catalyst We have a safe risk level off of this 120 going all the way back to this left side peak from May of this year. We have an undercut sort of rally, which is a technical sign of buying activity and demand following a sell-off event, which happened with the lockup period. We have a lot of factors making this an exciting opportunity with minimal risk, which is what we talk about on this channel. So that's the play. If you want to talk about the nuances of all these investments, of these trades, of your portfolio, head over to stockscommunity.com. I'm in there every day. We can chat. You get to talk for 7 days for $25. It's a pretty good deal. If you haven't subscribed yet, hit that subscribe button. Hit the like button if you like it. And I will see you in the next one.